Happy New Year and welcome to another Ariaswave update. Now, on this chart, we're looking at gold. So, if you have been following me on gold, you know that there has been a bullish version of my analysis and a bearish version. Now, I have decided that I am more inclined to believe that the bearish version applies more to the waves than the bullish version. Now, I don't like this, but this is not my opinion. It's the waves' opinion. So why would I go ahead and try to force the waves to do what they're not really they don't want to do that. So it's not really my job to say what the waves are going to do. And mind you, it's nobody's job to do that. Okay? So if that was like a disclaimer, that's probably one of the best disclaimers you can get. Nobody can tell you what the waves will do, but they can give you clues. So according to Ariaswave, which is a methodology that I created over 8 years, probably like about 8 years, um, I started to basically put out this information. Well, not information, but because like if I put out information, that means I'm teaching you how to, use Ariaswave, and I don't really do that. In order to do that, you need to like, learn it. But okay, so we're bullish at the moment. We can say pretty clearly. Well, I can say pretty clearly that we're bullish. We need to hit about 916 roughly. If you have been paying attention to any of my trades, you will know that. But that's it. So I've given you a bullish view. I've given you a bearish view. Now you can make up your own mind on which one of those you want to believe, tackle. I don't know. Like I really don't know what people think about this pattern. I really don't. But according to Ariaswave, this particular pattern is bearish. Why? Well, there's a whole bunch of reasons why I could say that, but it's like you need to learn Ariaswave for me to really get deep on that. But in this particular situation, I'm I'm going to tell you that E wave needs to be 5 waves in a particular way that's going to end this wave 2 correction. Now, when I say wave 2, it's not this wave 2. It's this wave 2. Okay? So how could that possibly be? Now, I don't know if you know Elliott wave. Now, Elliott wave is definitely not connected to it's got nothing to do with RS wave. But there are certain rules that do apply to the waves that I can clearly say have been uh, an integral part of how I present my material. So I've taken information from the past and used certain parts of it to make Arias wave. But it doesn't mean that Elliott wave has anything to do with Arias wave. So uh, it's really hard to explain it. And 2022, I'm going to use it to my advantage. Now, let's just start with this, right? So let's just go back to the 15-minute chart. Okay. Let's just go back for a moment. Just picture this, right? Now, I put out an idea recently that said that this here move would go up to the X. You know, that X up here. Well, it's about 1916. You know, it could be anywhere around that area. I would say it'd be around 1916. Why? Now, you probably don't know why, but you know, it's up to you to figure it out for yourself. But I did say that the red line is critical support wave 4. So, can you break below the end of wave 4 if you're going to be a wave 5? Well, the answer is no. It doesn't matter what you follow. You can't have wave 5 begin and then, you know, kind of break down below the beginning of wave 5. That would break every rule in the wave theory, any kind of wave theory. Wow. I don't follow Elliott wave myself, but I did create Ariaswave. Now, how could it be possible that some guy came up with a new wave theory? And in this particular case, the wave never broke down below the red line. Can you see that? Can you see that? It never touched the red line. So you tell me, and mind you, like this is something that I really need to make clear because waves don't really move fast. They don't. Like if you really had to, okay, so you had okay, so first of all you had to break above this magenta line, which took about what? Let's measure it. 6 days, almost 7 days. Okay, and then you had to wait for. Well, you probably would have seen this dip that went all the way down to like it's actually like 80, like it's like actually like 90% dip, and then it bounced. Right now, I always said that this is the beginning of wave 5. I did. As long as we saw the break of wave 5, you would never see, like, no, sorry. As long as you saw the break of this line, the magenta line, this is a wave D. Okay, right here, this is a wave D. This is E. Okay, as long as you saw a break of wave, the start of wave E, you can't see the red line broken. We never did. Mind you, that took about how long? Okay, it took about a whole day. But during that day, you would have been shitting your pants, to put it mildly. You'd be like, what? I thought this guy knew what he was talking about. Yeah. But I thought to myself, you know what? The waves are going to always psych you out. When have you ever had a trade where everything went beautifully for you? Has that ever happened to you? Have you always had these trades? Ever? Ever, or have you ever? You know what? Most likely you're going to say, well, I don't know. I suppose I was using support and resistance and I was hoping for the best. And most likely you're a freaking newbie because The people who really know how this works, well, hmm, I could probably count them on one hand. One, two, three, four, five. Not many, right? But in this case, like you can see quite clearly that my prediction is telling you that doesn't matter if it goes down 90% in this case, especially if you're a futures trader, right? Now, Ariaswave was designed for futures traders. Like you cannot go below a certain level. That's that's the crux of this conversation. Like literally it was designed as something to show you that there are certain levels that cannot be broken, right? Now, that's obviously pretty true. If you look at support and resistance, well, you can say, well, support is support, resistance is resistance. But what if I told you that there is a perfect and definitive way to say that a market cannot go below a certain line based on a wave? Well, you could call it a principle, but methodology, I like to call it, right? It's much easier to have a set of rules that can't be broken, right? If you have a principle, it's like, okay, maybe we can have uh these things happen and those things can happen, but you know what? It's all subjective at the end of the day. So really, that doesn't really help the little guy who's trying to like make a trade to make a little bit of cash. You know, he did. How the hell are you supposed to use Elliott Wave to really make you some money if you're a little guy, right? Maybe if you're like a corporation or whatever, you're gonna try and use, I don't know, some momentum. Like I think Elliott Wave is more of like a momentum trade, like long term, because short term, really, nah, you're gonna lose. But Arias Wave was designed specifically for levels to be precise and exact to the very point where you cannot break a certain level. Now, maybe it's not mainstream yet. And you know what? It will be in time. But I am here and I will spend a lot of time and a lot of years to prove to you that the little details matter, especially to the little guys who are margin trading. Not everybody deals with options. You know what? Options have time decay. Wow. Do I care? No. Do I really want to know where the market's going long term? Yeah, actually, that's probably like something that I want to know. Uh, you know, I think that's something that everybody wants to know, unless you're a fucking retard. Really, that has a lot of value. So, okay, take a look back at my previous history of this idea, and you will see quite clearly. And moving into the future, you know what the future means, right? Let's talk to people like they're a child. Sorry, I come from the IT world. I am an IT worker. I have watched the IT crowd. Have you tried turning off your computer and turning it back on? Well, that's the kind of person you're dealing with here. So, yes, you cannot break the red line once you go back up. But the wave E has to create the fifth wave before it ends wave 2 of wave 3. Okay, it's not hard. It's not hard to get. Okay, fine. You need proof. Keep yourself tuned to my channel, which I don't really care if you do or not. But you will see quite clearly that the waves move in a particular way that is predictable. Okay? I'm going to leave that up to you. I wish you a happy new year, and I bet you anything that this target will be reached. Okay. So why do I think it will be reached? Okay. So most analysts think that so we had so let's just do this for a second, right? Most analysts think that because we've hit this no, maybe not so much to that one, because you know what, analysts suck. They okay, they will give you this line. Mhm. They'll give you this trend line. Mm, yes. Okay. They will give you this trend line. Oh, wow. That looks better. Yes, I can use that. Where do you draw your trend line from? Which high do you draw your trend line from? Really? Are we playing that game? Are we? Because seriously, that's a stupid game. You might as well be playing Jenga. Which block do I pull out before the whole thing comes falling down? It's dumb, right? It's subjective. That's what Elliott wave is. Subjective. Ariaswave has a very specific set of rules that can never be broken. The only thing that will cause you to have an incorrect interpretation is you as the analyst. Okay? Not that you read a book called The Elliott Wave Principle and you're like, oh, it could be this, could be that, and we can have a field day on what it could or couldn't be. No, Ariaswave will give you a certain set of parameters that will give you the actual meaning of the waves. Now, if you can really dial that into your mind, it's very specific. Now, I don't give a hoot if you do care about that type of analysis or not. I don't care. I don't care. Because at the end of the day, I know that this is the best way of understanding how waves operate at a very granular level. Something that I do not believe exists apart from this. So, if you ever wonder why its value is what it is, if you know what I mean, well, I'll give you 10 years to decide that for yourself. Okay? I'll give you 10 years. Now, that 10 years is going to cost you 10 years worth of time and effort and capital. Okay? Capital, effort, time. Go back, go forward, back and forward. But if you really want to learn how this operates, stay tuned. You will see it for free. But if you want to learn it, you can. Welcome to Ariaswave.